Meta reported earnings yesterday after the market closed, and the earnings were really positive. The company grew their revenue, they increased their profitability, they generated really good cash, and they're investing in the business so that they can build the next big business. Meta is the social application giant, really, of the world. If you consider billions of people log into a Meta application every single day, from WhatsApp, which is a very popular international application, to Facebook, to Threads, Instagram, the company is loaded with the top applications that people like to browse on, stay current on, build communities, stay in touch with family. It's pretty incredible how many things Meta does. A hidden gem for all of this is the AI business, and I'll take a closer look later. But Meta early on was not considered a big AI company, but as I study them closely, it is a big part of their business and a big part of their future. The metaverse continues to be a part of the company. They continue to build out the metaverse, and their Ray-Ban sunglasses have been popular. And maybe that's the way that people can go into augmented reality or virtual reality and have those experiences in the future. We'll see how that plays out. I'm an investor in Meta and have been an investor for a long time. And I wanted to analyze the company now that I have fresh data, take a look at their financials, look at their earnings, and see how the company is doing. Analyze the company and see where I put them on my desirability quadrants. Are they really desirable or just an okay company? Value the company based on free cash flows and earnings per share to arrive at what I think the company is valued per share, and then compare it to the current stock price in order to make a decision whether I should buy more shares, just hold, or even sell my shares. I'll go through that rationale with you. Now, everything that I share is just one investor sharing his analysis with YouTube. It is not investment advice. Please make your decisions carefully and do your own research. Now, let's take a look at the fundamentals of Facebook, Meta. Meta is a large cap company with over $1 trillion of market cap. It's 1.2 trillion. The market's expected to make the stock go up at the beginning of the trading day. It's before the market is open. So if we add that 9%, it's probably going to be a 1.3, $1.4 trillion company later on today. The company has $142 billion of revenue, which is excellent. If you consider their margins, it's just an incredible amount of revenue. The PE for the company is 27. The stock has been doing well this year. And the forward PE is 22.5, which I believe is a really good value considering that the company is growing. It's clearly the leader in their space, and I would expect a higher PE. The company pays a small dividend, not a dividend stock by any means. And analysts really like the company. They think it's a strong buy, and the stock is discounted by 13%, soon to be 4% if you consider it's going to rise about 9%. The company's done really well over the past year. It's up 30. In 2024, it's up 35%. In 1 year, it's up 49.5%. It's really been an excellent stock overall. Meta's really grown their business over time, and they've gone from being a $70 billion company in 19, and now they're trailing 12 months, they're nearly a $150 billion company. That's incredible. And you can see the real growth rate. They had one slight down year in 2022. I think part of it was in 2021, they just grew so darn much. They probably pulled forward a lot of the investments. So overall, just great growth for a very big company to be growing 20% plus on a big giant number is super impressive. The balance sheet's really strong for Meta, principally because they have a lot of cash on the balance sheet, 58 billion of cash on the balance sheet, and they have less debt than they do cash. It's $38 billion. So they could pay off all their debt immediately if they wanted to. The most valuable companies on the stock market all produce high amounts of free cash flow. They also are growing companies. They are also leaders in their particular industry space. In the case of Meta, they are great at producing free cash. When you look at their sales, if you recall, were roughly about $150 billion, and they are producing about $50 billion of free cash. 1/3 of its revenue ends up being free cash. That's a clear sign that margins are excellent. It's not a business that takes a lot of expense. And overall, it becomes a really valuable business. The earnings for the second quarter for Meta were really good. If we look at revenue grew 22%, which is excellent. And the overall profitability increased 71%. So just a double positive where you have expanding revenue and expanding profit at a greater percentage. That's really impressive. The number of users on Meta platforms has gone up 7% year over year. So that looked really good. Their cash flow is very good, and the company is guiding to have an excellent Q3 and overall a very good 2024. Meta is a leader in social applications by a big margin. There's no other company that's even close to Meta's size and number of users and really daily active users, monthly active users. And they keep expanding. For example, Threads continues to grow and take market share away from X. Now, one hidden business, and I don't think it's been hidden all that long now, is the AI business. And you consider a couple of things. One, Meta was investing in AI. They just didn't really make a big deal out of it. And they have great capacity to build their AI application to do a lot of things. I was offered the Meta app a couple months ago, and I played around with it, and it's very good. I've played around with ChatGPT, Gemini. I don't use them on a daily basis, but I would say a couple times a week, I jump over there and ask it to do something. The Meta AI app is really good. And you think about the advantage that Meta has. They could offer their AI to billions of people quite quickly, easily. That access to that many daily active users, monthly active users, is unrivaled. No one else in the space, even the massive Google, which has so many Gmail users and users of YouTube, they don't have as many users as Meta. You look at ChatGPT. ChatGPT is a very popular name among people that are probably ahead of the curve on technology. But to the average person, you ask them if they know of ChatGPT, their answer is no, and their exposure isn't very high. I think they have something like 135 million users of ChatGPT. Well, compare that to multiple billions of users on Meta. So Meta has a huge advantage of being able to distribute their AI app. So first, it's a very good app. Second, Meta has the capital to really make this business work. And it could become just one more application amongst its portfolio that is incredibly valuable. So Meta is just clicking. It has a great operational team, and the future is really bright with AI being well covered by Meta. So I've put together my desirability quadrants to really point out the companies that I want, companies that I want to stay away from. And I want companies in the green, companies that have competitive barriers of entry so their competitors can't come in and compete for the business and drive down margins, drive down the value of that business. And stay away from companies in the red, which are companies that have excessive competition, they don't have great margins, and don't produce much cash at all. And Meta is clearly the leader in their space. Their social applications are clearly ahead of everybody by such a margin that it's hard to imagine they're going to be caught at any time soon. More importantly, they continue to invest in their business to make their applications even more desirable. They expand their applications. For example, Facebook Marketplace is a really neat place where people are beginning to buy and sell. It has a lot of potential to be almost like an eBay within Facebook. So that really has a lot of potential, and just one more example of how Meta continues to expand and keep their user base really interested in their apps. So overall, Meta is an easy company to put into the highest point of the green quadrant, making it a really desirable company for me. And therefore, I'll treat it that way as I go into the valuation. So I've valued Meta using their free cash flows as well as their earnings per share. As mentioned, Meta is just a high cash flow producing company. It's also a growing company that really makes them really desirable. Their last year free cash flow is 47 billion. They'll probably do a little more, but I'm going to be conservative in year one and just have a starting point of last year's number of 47.3 billion. I'm going to grow it by 8% for the first 4 years, and then terminal value I'm going to grow at 5%. I'm going to discount by 8%. I could easily go to 7.5 since interest rates are dropping. But again, let's be conservative, and I'll go with 8. Really, the net present value of all those cash flows in today's values, 1.6 billion, a trillion, excuse me, dollars. I'm going to add the cash and take away debt. So the equity value of Meta for me is $1.6 trillion. The market cap, again, it's ahead of the market open, so I'm just going to use what's on public websites, is 1.2 trillion. And I'm going to compare the intrinsic value per share against a stock price that is the stock price that it should open at, $513. So when we look at the free cash flow valuation of Meta, it has about a 26% discount on the number one player in social apps. Earnings per share look great. 20.65. That might be a little bit conservative. The PE, I'm going to move it to 30. They are trading less than 30. I think they're worth 30. And their growth of that earnings per share is expected to be quite high. I'm going to go with a 10% growth rate on that earnings per share. It calculates a stock value of $681, but the current stock price, based on where it's supposed to open, it's 513. So there's about a 33% discount if we look at earnings per share. So combined, it offers a 28% discount for me for the number one player in their space, an incredibly growing company with the AI business and everything else that Meta delivers. I think that's quite an offer to buy a stock at a 28% discount for me. So I've looked at the company, really looked at their business to see if I like the business. And most definitely, I really like the Meta business. And I really like that the company just has not really stood still. They have made their company stronger and better. They've made their products better, the experiences that their users have, making them better. They've broadened their business, bringing in an AI, Facebook marketplaces. The Threads business is relatively new and is continuing to expand, the users and the engagement on that application. So the business is just a really desirable business, really a very strong business with a strong moat, and I really like the company. The balance sheet's excellent. They have more cash than they do debt. They produce high amount of free cash and high amounts of EBITDA. So the balance sheet is incredibly strong. So balance sheet's good, company's great, and a 28% discount on a high quality company. So I am a buyer of Meta. I've been buying Meta shares on pullbacks just because I want to continue to build my position. I have a position at $198,000. That's before the open. If it opens 9% higher, it'll be 9% higher on that amount. And I continue to add shares. It's the biggest position in my portfolio. And I am comfortable with that because Meta is such a great company. Most of the appreciation that I've seen is making up that number. I'm sitting on a good gain with Meta, and I'd like to see it grow and grow in the future. So that's my video on Meta. I hope you found it interesting, and I really appreciate you watching.